The subscription drain. Tiny recurring charges bleed thousands from your account annually while staying completely invisible. Streaming platforms, premium apps, cloud storage, memberships you forgot existed. Each one seems insignificant. Combined, they devour your income. You sign up for a free trial. The trial ends and billing starts automatically at $10 monthly. Perfectly affordable, so you ignore it. Then another service at $8. Then $15, then $12. Before long, you're running a dozen subscriptions in the background. Most you barely touch. Some you've completely forgotten. That streaming service you watched once 6 months ago, still charging. The meditation app you used twice, still billing. Add them up and you're losing $150 to $300 monthly on services providing zero value. Over a year, that's $2,000 to $4,000 vanishing into digital products you don't use. The trap works through invisibility. Each charge is small enough to ignore individually. Your brain never registers the cumulative damage. Meanwhile, companies design their cancellation processes to be deliberately complicated, counting on your laziness to keep paying forever. You're funding a passive income stream for corporations with money you'll never notice missing. Financing your image. Drowning in debt to project a lifestyle that impresses nobody who matters. Designer purchases to signal wealth, expensive meals to demonstrate status. Vacations you can't afford displayed online. Everything borrowed from a future you're destroying. It begins with watching others. Your colleague shows up with luxury accessories. Your neighbor renovates. Your friend posts vacation photos. Suddenly, your reality feels inadequate. You need to demonstrate you're equally successful. So the spending starts. Credit cards emerge. Premium brands to broadcast sophistication. Reservations at overpriced restaurants so others witness your presence. A financed getaway stretched across 12 payments. None of it serves you. It performs for an audience that you assume is scoring your life. Here's what nobody tells you. They're not paying attention. They're too consumed financing their own performance. That colleague with designer items is buried in payments. The neighbor refinanced their home. Your friend's vacation maxed multiple credit cards. Everyone's performing, everyone's assuming everyone else is authentic. You're paying interest on experiences you didn't savor and purchases you didn't need to impress people who forgot about it immediately. The performance of success destroys actual success, and your audience isn't even watching. The grocery upgrade creep. Your food spending doubles because you started buying premium versions of everything. Organic produce, name brands, pre-prepared meals, artisanal products. Each switch feels like self-care. Together, they demolish your budget. You get a raise or promotion. Money feels less tight. At the grocery store, you grab what looks better. Organic milk instead of regular. Grass-fed beef instead of standard. Name brand cereal instead of store brand. Pre-cut vegetables instead of whole. Each choice adds maybe $2 or $3, but you make 40 of these choices every shopping trip. That $80 grocery bill becomes $160, then $200. Your brain rationalizes every upgrade. It's healthier. It tastes better. You deserve quality. But the cumulative cost is staggering. What was once $320 monthly is now $800. That's an extra $5,760 annually. The trap isn't buying quality occasionally. It's making premium your default without questioning whether the upgrade actually improves your life proportionally. Most blind taste tests prove people can't distinguish premium from standard products. You're paying for the feeling of buying better, not for something meaningfully better. That feeling costs you thousands every year. The cash value illusion. Whole life insurance presented as investment strategy, where you pay enormous premiums for coverage that supposedly builds wealth, but really just makes agents rich while your money grows pathetically slow and stays trapped. The sales pitch sounds brilliant. Insurance that never expires, plus it accumulates cash you can access. The agent frames it as disciplined wealth building. Mature financial planning. You sign up believing you've made the intelligent choice. Here's where your money actually goes. A massive portion funds commissions and fees. The salesperson gets compensated first, generously. What remains gets split between insurance costs and a cash value account growing at roughly 2 to 3% annually. Meanwhile, you could have purchased term life insurance for 1/10 the cost and invested the difference in an index fund, returning 8 to 10% yearly. Across 20 years, that difference becomes hundreds of thousands of dollars. Your whole life policy builds maybe $30,000. Worse, accessing that cash value requires borrowing against your own money and paying interest. If you die, the insurance company retains the cash value and only distributes the death benefit. Whole life insurance isn't protection. It's a wealth transfer disguised as financial planning. The eternal renter mentality. Staying in expensive rentals year after year, watching your money vanish into someone else's investment. Meanwhile, you're building zero equity and your rent keeps climbing. You're not settled yet. You might move for work. Buying feels overwhelming. Renting feels simpler. So you stay. Your rent increases 5% annually. What was $2,200 is now $1,800, then $1,800. Over a decade, you've paid $180,000 in rent. Money that's completely gone, building someone else's wealth while you remain exactly where you started financially. If you'd bought even a modest place, that same money would have built equity. The property would have appreciated. You'd own something with actual value instead of rent receipts proving you paid someone else's mortgage. The fear of buying keeps you trapped, but renting isn't the safe choice. It's the expensive choice disguised as the easy one. You're funding their retirement, building their generational wealth. Every month makes your landlord richer while your net worth stays flat. You tell yourself you're waiting for the perfect time. But perfect never arrives. Meanwhile, rent continues rising and the opportunity to build equity slips away. The bonus evaporation. You receive a windfall, tax refund, work bonus, inheritance, gift, and instead of transforming your financial situation, it disappears within weeks into purchases you can't even remember. The money hits your account and your brain shifts modes. This is extra. Free money. You can spend it guilt-free. So you do. That thing you've been wanting, now you can get it. Multiple things actually. New electronics, clothing upgrades, nights out, small home improvements. Each purchase feels reasonable because you have the cash right now. Within a month, it's gone. Every dollar spent on things that provided temporary satisfaction and are now just part of your existing life. The TV you bought is just a TV. The clothes are in rotation. The dinners are forgotten. What could have cleared your highest interest debt, started an emergency fund, or invested for compound growth instead, became a brief shopping spree with nothing to show for it. The pattern repeats every time unexpected money arrives. The opportunity vanishes into lifestyle inflation that doesn't even register as improvement 6 months later. You got a chance to change your trajectory. You chose to maintain it at a slightly more comfortable level. The pay later plague. Buy now, pay later services split purchases into installments, making everything feel affordable while you accumulate a dozen overlapping payment plans you can't track. You're juggling debt without even realizing it's debt. The price seems high. Then an option appears. Pay in 4 installments. No interest if you pay on time. Suddenly, $200 becomes $50, which feels manageable. You accept it. Then you buy something else. Another payment plan. Then another. $15 here, $30 there, $50 somewhere else. But you're not tracking the cumulative total. You've got 8 different payment plans running simultaneously across different platforms. Some charge weekly, others bi-weekly, others monthly. Your brain can't map it anymore. Then you miss one. Instantly, there are late fees. Then interest charges. The no interest deal vanished. Now you're paying 25% APR on what was supposed to be free financing. Meanwhile, more payment plans keep starting. You're constantly buying on installments, constantly owing. Those $50 payments don't feel like debt. But you owe $200 across various platforms and you're paying fees and interest. Buy now, pay later isn't convenience. It's debt disguised as budgeting. The income escalation myth. Believing your financial problems will solve themselves when you earn more money. You're struggling now, but once you get that promotion, everything will get better. Except it never does. Your income rises and somehow you're still broke. At $40,000 annually, you're barely making it. You tell yourself once you hit $60,000, you'll get ahead. Then you get there. The income arrives and immediately, invisibly, your life expands to match it. Better apartment, nicer car, more frequent dining out, upgraded subscriptions. Nothing feels excessive. It all feels justified by your new income level. 6 months later, you're in the exact same financial position. Still no savings. Still living paycheck to paycheck. Just at a higher salary. The cycle repeats. You chase $80,000. You get there and expenses rise again. Each time, lifestyle expansion consumes every extra dollar. The problem was never your income level. It was the automatic lifestyle inflation that shadows every raise. Your spending will always rise to match your earning unless you consciously prevent it. People making $200,000 feel broke for the same reason. People making $40,000 feel broke. The gap between earning and spending determines your financial health, not the absolute numbers. The minimum payment trap. Credit card companies let you pay tiny amounts monthly while interest silently multiplies your debt across decades. You believe you're managing it. You're actually feeding it. The statement arrives. You owe $3,000, but the minimum is just $60. That feels achievable, safe. So you pay it and continue with your life. Here's the invisible reality. Most of that $60 goes directly to interest charges, not your actual balance. Maybe $10 touches what you owe. Next month, interest compounds on the full amount again. Your balance barely decreases. At this pace, that $3,000 debt requires over 12 years to eliminate. You'll ultimately pay nearly $6,000 total. Double. And that assumes you never use the card again. The system works because $60 feels harmless. Your brain sees an affordable number and stops calculating the mathematics underneath. Meanwhile, compound interest operates quietly in the background. Credit card companies engineer minimum payments specifically to keep you paying indefinitely. You think minimum means sufficient. It actually means endless. You're not managing debt, you're maintaining it. You're just renting your own money back from the bank at devastating rates forever.